Stock investing for Stock investing for beginners. Stock markets are going down. I'm going to tell you 3 reasons why stock markets are going down, plus 1 bonus reason. And I'm going to talk about 5 stocks that are supposed to be reported earnings next week, and how to differentiate good stocks from the bad stocks, and also what stocks do I own, and do I think if the stock's gonna go down further. That's what we are gonna talk about today. Comment down below. Shift from, and also what time is it in your time zone right now. If you have any question, comment down below. S&P 500 is down 0.88% on April 19. But if you refresh it now, we are on. Okay, it's not showing up. It's down 0.88% on April 19. But if you refresh it, for some reason it's not showing up. It's supposed to show April 20, but I was preparing this one yesterday, and S&P 500 is quite down today. So, but the last 5 days, S&P 500 is down 3.54%. 1 month, it's down 4.93%. We are still in pullback, not in correction, because it's only down 4.93%. But if S&P 500 is down 10%, we could say it's in correction. But I know it really feels painful. But if you look at it, S&P 500 is still at 4.73%, and Nasdaq is down 0.52% on April 18th, and it wanted to go up in the morning, then it went down. So that's a sign of pullback or correction coming. A few months ago, probably in March, February, the stock markets, they want to go down, but they close higher. Now they want to go up, but they close lower. So that's a sign of pullback or correction. Do I think it's bottom? Not necessarily. There are some reasons why stock market could go down further, and there are also some reasons why stock market could reverse and reverse and recover. So I'm going to tell you in a short while. The past 5 days is down 6.11%, and 0.8% is down this on April 19th. 1 day 2.05%. Year to date it's still up 3.5%, but it's quite pullback quite a bit. 1 month 6.64%. So Nasdaq is going into correction zone. Dow Jones April 18th, it wanted to go up, then it went down. The past 5 days it went down. But if you refresh it for today, 1 day, it's up. So April 19th is up 0.056%. And 1 month is in pullback zone, 3.86%. Year to date, it's still up, but not much. If you look at the past 1 week, every day is red except for the hair care. And the past 1 month performance, every day is red. Maybe some Google, Meta, energy company. And number 3 reason why stock markets are going down is because sudden rise in treasury yield. Treasury yield rise is not because of war. Remember, the stock market opened on Monday in green, but then it dropped because people saw there's a sudden rise in treasury yield, so they get panicked, and the stock market was sold out. And number 2 reason is Jerome Powell says interest rate could stay high for a longer period. So stock market didn't like it, so it pulled back again. And a few others, Federal Reserve presidents, they came out and said, we should wait and see approach, even the more dovish one. So if you see dovish Federal Reserve presidents saying that we should wait and see, so that means that we could probably get a rate cut later, or maybe October November or December, or maybe it will just be one cut or two cuts instead of three cuts. So that's why stock market sold up. And reason number one is ASML. ASML reported disappointing guidance. The actual result came in lower. That guidance wasn't as good, so it dropped 8.23%. And another reason, bonus reason, it just happened today, Friday. So bad Friday, not good Friday. Okay. So SMCI, they announced the earnings report date, but they did not pre-announce the results. So they used to pre-announce the results. So some stock market thing, investors thought, oh, why are they not telling us the result in advance? Maybe the results are really, really bad. So I'm just gonna sell SMCI. So it dropped 23.14%. That's pretty crazy. SMCI dropped, Nvidia dropped. Because of that, yeah, that's why we see a really, really bad pullback today. Nvidia, look at that, 10%. Why? There was a up. Maybe this is an error, or maybe it's just somebody trying to buy. Yeah, most likely error. So 10%, that's pretty crazy. But no matter what happened, I still made money. So remember, in stock investing, it's important to make money. If you only know stock investing, yes, it's probably hard to make money when stocks are going down. But if you know call option, put options, advanced option, yeah, you can pretty much make money. Of course, not everybody will be able to do that. I'm just showing you what I did, how I performed from April 1st to April 19th. Half a month, I made over 6,000. So this is better than most people make. Remember, average person probably made less than this amount in a month. Some parts of the world, they can only make this amount for the whole year. So if you want to shorten your time, if you want to get more time, you need to learn how to do investing, trading. So I only spend 1 to 2 hours a day trading, options, investing in stocks. I travel around the world full time, but I still make money a lot. And for my family, for my relatives, for myself, for my loved ones, because I'm able to buy back the time. So these are the time. These are not just money, okay? These represent the time that I get back from life. Okay, if you want to get started, you can open a stock brokerage account. The link is gonna be down below. If you want to do mentorship consulting, the link is gonna be down below as well. Stock Bank of America. The last 5 days, it dropped 0.06%. So that was on April 19. Oh, it back up again today, or April 19. So April 18, the past 5 days, it dropped because of the earnings. Earnings did not report really well. Nothing surprising. Remember, I do not like this stocks because it doesn't beat S&P 500. So nothing surprising. Morgan Stanley, it jumped after earnings report. Morgan Stanley beat S&P 500. So no surprise, it jumped. So I wouldn't be so surprised about it. But I just don't like the banking business, so I'm not gonna invest it. But if you like it, you can invest in banking. And Johnson & Johnson, yeah, I don't like this company, this business, this stock. So it dropped after earnings report. No surprise here. I created this data on April 18, so it still shows April 18. April 19, we can look at 5 years, and 5.36% the past 5 years. It doesn't even make the cut. You be better off putting money in some commercial deposit, certificate deposit, and you still probably make more. So the past 5 days, yeah, it's one back up again. And also United Airlines, oh, it jumped 22.8%. They lost less than expected. So that was good news. So it jumped 22.8%. But no, this is not a good stock or good company. You cannot decide if it's a good stock, good company by just looking at 1 day performance of 20%. If you look at the past 5 years, 41.57%, it has not been performing well. You will have lost money. So it's not good business. Remember, if you are in a relationship and you don't like your girlfriend or boyfriend, you dump them, you leave them, They may realize their own mistake and they may perform a little bit better after the breakup, 1 month, 2 months. The next person gonna think, oh, she's a good girl, she's a good guy. But the thing is, they are performing well because they got dumb, okay? And just like that, stock, it can perform well short term, but it doesn't mean that it is a good stock. You need to look at the past history, the past performance. And most likely, if the performance the past 5 years bad, the next 5 years probably bad. Yep, so look at that. And the next one is Netflix. On Netflix, their revenue guidance disappoint, and they beat earnings. Their subscriber also beat estimates. It still dropped. They're not gonna report subscriber count anymore, so people got suspicious. But I just think that Netflix want to focus on something longer term rather than focusing on short term gain. So that's why they don't want to report subscriber count anymore. So Netflix Q2 revenue forecast disappoint. So that's why it dropped. So yeah, there are a couple of reasons why the stock market pulled back quite a lot because of all these reasons. 3 reasons plus 1 bonus. If you think this is another reason, so that's going to 2 bonus reasons that I'm giving you today. Okay. Next week economics report. Which one is important? PMI may not necessarily be so important for, let's see. Yeah, not necessarily important for stock market volatility. GDP probably yes, if GDP is perform better. And jobless claims not anymore. It used to impact stock market, but I think the main thing is going to be Friday, core PCE index. If it's lower than expected, if it's lower than 0.3%, and that will be good news, and stock market could recover and go up again. But if it comes in higher than expected, it's going to be really, really bad for the stock market again. So I believe for next week, probably Wednesday or Thursday, investors could get nervous and probably the stock market could go down until Friday. If it surprises, then we could see a green close on Friday. Right now, usually Fridays the stock market close in the red. So I don't like it, but I think that's a sign of pullback. I believe so. I'm sure about it. Pullback is always happen. In the morning, the stock market opens green. Then in the afternoon, stock market opens red. Alphabet stock gonna report earnings. Year to date is up 12.8%. Is it a good company? If you look at the past 5 years, yes, it beats S&P 500. So look at S&P 500, the past 5 years performance. If you look at it, 5 years, 68.96%. So let's say 69%. If it's more than 69%, it's good. Google is 141.26%. Yeah, it's a good company. Has it been around for more than 10 years? Yes, at least 10 years. Has it been a public company for at least 5 years? Yeah, it has been a public company for at least 5 years. Do I like this business? Yes. Do I like its financial statements? Yes. It's all yes for me. So that's why I own this stock. 5 criteria. Remember, I have my own 5 criteria. So right now, I've gained 49.57% in my portfolio. When I bought it, of course, I average up, average down. Total cost was 10,000. Right now, the value is 15,000 plus. And yeah, I like Google. This is not a financial advice to buy Google, but I'm just telling you I like Google, that's all. And stock number 4, Chipotle. Chipotle is a food stock. So basically, year to date is up 29.55%. 5 years is up 323%, 4 times money. So yeah, it's a good stock. Has it been in the business for at least 10 years? Yes, founded in July 13, 1993. Has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. So that's pretty good. And do I like this business? I'm not so interested in basically food business, so I'm not gonna buy food. They are going to report earnings on Wednesday 24. Google is gonna be on Tuesday 23rd. And nope, I will pass, but if you like it, you can look at their stock, their financial statements, see if it's a good stock or a good company, and you can invest in it. I think most likely it's a good company. There is no reason that stock could go up 323% for the past 5 years if it's not a good company. Okay, stock number 3, Amazon, year to date is up 19.5%. 5 years is at 83.71%. It beat S&P 500. It has been in business for at least 10 years. Yes. Has it been a public company for at least 5 years? Yes. It passed my 3 criteria. Do I like this business? Yes. It's a technology company. I like AWS. Not so much on online shopping. Online shopping doesn't make money. But AWS, yes. If you are watching Netflix, where do you stream the data, the video from? Amazon Web Services, their server, their data. So Amazon has lots of big companies, customer as their customers, and their advertising is catching up with Meta and Alphabet. So yeah, I like Amazon for the long term, so I own it, of course. I have 103 shares, gain about 41.92%. The cost was 13,000, the value is now 18,000 plus. Yes, stock number 2, Intel, down year to date 26.69%. And if you are basically look at the 5 years trend, it doesn't even make money at all. So not to say beat S&P 500. See, if you are thinking, oh, this is a going uptrend, so it can just go up more, you will be wrong. So that's why I never touch bad companies, bad stocks, in my opinion, because it can reverse anytime, and you could be losing money if it reverses like this one. So no, I'm not gonna touch it in time. And some people say, oh, they can recover and you perform better, but you only have 5 years chance, and you say doesn't do a good job. So probably the next 5 years may not be better. So we just need to wait and see before you start touching investing like that. Okay, stock number 1, Microsoft, year to date 9.02%. 5 years is up 211%, so it's not bad. Yeah, definitely has been more than 10 years, at least 10 years. My criteria is at least 10 years. There has it been business for at least 5 years? The public company for at least 5 years? Yes. So do I like this business? Yes, I use Microsoft quite a lot. Excel, Microsoft Word, PowerPoint, and yeah, so I own Microsoft 123 shares. It's easy to remember, and 19.15% up, and then I use about 41,000, and right now it's 49,000 plus. Yeah, if you have any question, comment down below. Like, share, subscribe.